Welcome to the daily update, where I'll go over the action in the market for Thursday, August 24th, and then we'll see how things look for Friday, August 25th. We had a significant down day after we had been showing some improvement. The market was pretty much overtaken by the sell the news type of mentality, especially ahead of Chairperson Powell's speech on Friday. The market got spooked by that a year ago, and so they're taking this once bitten, twice shy approach. They don't want to get caught like that again. So folks ended up coming in and selling. A lot of the positive things that we were developing have pretty much vanished for right now, and we're switching back to more negative. Please be aware that I will be doing a free online course in September. That will be The first course will be Monday, September 4th. That is Labor Day, which may present a problem for some of you. That's when I'm going to do the 3-hour course all at one time from 12 to 3 p.m. Eastern time. And then the following week from September 11th through the 13th, I'll be doing 1 hour at a time over Monday, Tuesday, and Wednesday. I plan on streaming it on YouTube and Rumble at the same time. If that falls apart, I will use Zoom as a backup. I'll go ahead and put my link right before I start the class on the YouTube channel community page, so you can click over to that. These things always have some variables in there that you can't control, and I just want to try to cover as much of that as possible. Let's go back and talk about what happened. Right at the open, we did have a gap higher open. Futures were strong. When I recorded yesterday's video, we were up 0.75%. By the time I finished, we were up 0.5%. And then we ended up coming down, but then the market gapped higher above R1 at 44.54. Unfortunately, we ticked a little bit above that, but that set the high for the day. Then we started to go down. We went below the unchanged level, the daily pivot, which really wasn't all that important in Thursday's session at 44.25. We hit S1 at 44.07. We went down a little bit below S2 to close below S2, and S2 was right at 43.78. We were down 1.35%, so we not only gave back, but then some to the improvements that we saw in Wednesday's session. We were still below average with volume. The technicals are now shifted back more negative. A lot of the improvements that we were seeing have pretty much gone now. It's not so much about inflation and interest rates, at least for Friday's session. That's bigger picture. It's more, what is Chair Powell going to say at this conference? All right, some other comments. The S&P was now back below 4,400 as the market sold the news on Thursday. The mega caps were weak and growth underperformed. The current scenario is kind of coming back in again, where the economy is stronger than expected, even though we didn't get really strong reports on Thursday, and that the Fed will need to keep rates higher for longer and maybe even raise rates. But at the same time, we're concerned about the economy in China because it's getting weaker there, and they're actually cutting rates to try to stimulate their economy. The 50-period simple moving average is providing overhead resistance, and I'll show you that on the charts. On a short-term basis, we have the 20-period exponential moving average. That's a new addition where the stochastics have been on there for a while. They're looking more extreme negative. Intermediate term, extreme negative, we have the S&P 500 McClellan oscillator, which was on and then off. Well, now it's back on again. And then the PMO studies, which have been there for a while. The dollar and interest rates were up, and that provided headwinds for stocks. All of the yield curves that we follow are still inverted. Sentiment is now ticked down to negative at 44, where it had been at 49. Our trend is negative. The ADX in the intermediate term is still below its moving average, so that suggests a weakening trend, but it's still above 20. With the down day, our bias is negative and our momentum is mixed to negative now. The economic reports that came out, we had weekly jobless claims. They came in at 230,000, less than the 240,000 they had expected. The continuing claims came in at 1.702 million, and I have a chart to show you this. Durable goods orders were down 5.2% month over month, greater than the minus 4% they had expected. When you take out transportation, we were up 0.5% month over month. They expected it to be up 0.2%. Here's the chart of the durable goods orders, where we're still above zero, but we have been declining. When you take out aircraft, also declining, but still above zero. Month over month, we saw a pretty significant downward move when you take the whole report together. Here's a look at the job situation right now, where the initial claims, they are ticking down just slightly. The continuing claims are also continuing to fall, but they ticked up this past week. And the unemployment report that we got a few weeks ago is still at 3.5%. Here's a look at the VIX, where we take an average from 1990 up to 2022. That's the blue line. And we're wondering, are we going to follow that same basic pattern in 2023? We've kind of gone along with this pattern so far. If this continues to go up, that usually means that stocks are going down. So that could be more negative. But when you look at earnings, we're still seeing them going up. And these are the NTM, or next 12 months earnings projections, and they're still looking positive. Here's the intraday chart where we did gap higher. We got a little bit above R1, and then we came down, and it was kind of obvious that we weren't going to fill the gap, and I'll show you why I mean that in just a minute when we look at the intraday charts. We came down below the unchanged level, down below the daily pivot, which really wasn't all that important in Thursday's session, down to S1, tried to bounce. That wasn't happening, came all the way down to S2, and closed slightly below S2. Here's the intraday chart. We really spiked up after NVIDIA came out with their report, and we, for the most part, kind of held on to that. But then we started to drift a little bit lower as the cash market opened. We did spike up as everybody was reacting to that, and then spent the rest of the day coming down. This is what I was watching, and the next chart is also kind of telling, where we were doing okay with growth. It still outperformed value, but after we hit the top right after the open, it really started to come down, as did value. This is what I was watching that really gave some clues that we're not just going to pull back to the unchanged level. We're going to turn and go negative. Right after the open, we spiked down with the growth to value ratio. We saw a little bit of a bounce as we were going lower, but then as the day unfolded, it got even weaker and closed pretty much at the low. Looking at the VIX, we are turning back up slightly with the line chart and the bar chart. We're showing volatility picking back up. The market kind of got caught by surprise. They thought, okay, we're at a pretty significant point where we can bounce. We're looking a little bit better. Let's go ahead and buy. Well, then the sell the news idea came into the market and kind of freaked a lot of people out. The 5-period simple moving average of the equity put call ratio is continuing to decline. That's positive. And here's a longer term look at that same chart, where we're still turning up with our VIX to VVIX ratio. That's more negative after we had been declining. And then our 253-period simple moving average, it's also starting to turn back up after it had been declining. That's more negative. We had the latest reading of the American Association of Individual Investors, and then they tend to react to what's already happened. And a week ago, things were not looking very good, so we ended up dropping below zero. Here's the ADX, where we're declining. We're below the moving average, but we're still above 20. The red line is still on top. Our short-term ADX is still below 20. The red line is still on top, and we're below the moving average. Then here's the daily chart, where we came down to this previous low, which also was a previous high, and this looked like a good spot for us to go up from. And normally that would be the case, but then we ran into the 50-day moving average right after the open in Thursday's session, and then spent the rest of the day coming back down. On the bottom, we see where volume is still below average. Our 20-period exponential moving average is starting to get extreme negative. The stochastics turning down in the short term, rolling over a bit in the intermediate term. We're trying to turn back up in the long term, but we're still extreme negative. We were showing some improvement with the standard deviations chart, where now we've fallen back down into the second standard deviation. Also, the 20-period simple moving average of the open, high, low, close, we came right up to the moving average of the close, and that might be providing some overhead resistance. The summation index based on price is now starting to drop below zero. That's negative, where we had already dropped below zero based on volume. The NYSE bullish percent index also dropping below 50. That's turning things more negative. The mass index is still trying to come up here. It hasn't generated a signal yet, When we get above this red dash line and then above the blue line and then drop down from there, that's when a signal will be generated that we're looking for a reverse of trend. We're having to bring out the fib charts again now after having the down day. We're wondering if this 100% retracement level will provide support if we keep falling. A longer term look showing the 61.8% retracement level. We're still kind of far above this, but still we want to keep an eye on these levels. And here's this same chart again. It must be really important. Okay, the accumulation distribution. It never got back above the moving average, and the moving average is declining where we're seeing more follow-through weakness. We're also going from positive back to neutral for the S&P 500 on the Elders Impulse system. We're still positive with the parabolic SAR with the dots underneath. The slope oscillator was trying to turn up, but then after Thursday's weakness, it's now continuing to decline and is also considered to be extreme negative. The MACD is also looking more negative. It was trying to turn back up, but with the decline, we're now continuing to fall and we're below zero. The moving averages, we came right up to the simple moving average, the 50 period, and that's where we hit the high and then we bounce back down. After Wednesday, we closed above the 50 period exponential moving average, but on Thursday, it acted as overhead resistance. The S&P 500 McClellan oscillator, after being extreme negative, was showing some improvement. Now we're back to looking extreme. The Chaikin money flow, this is kind of positive. We're still seeing the red line going up, and we saw a bit of improvement with the Chaikin money flow, although it's still negative. The PMO study, after not being extreme negative, has now dropped back down. When we look at the PMOs that are rising, we're still extreme negative with the buy signals, and we're declining with the PMOs that are above zero. We're still inside the Ichimoku cloud for right now, wondering if that will provide support. The longer-term MACD starting to roll over, and after Friday's session, if we have a down day, that's going to lock in the whole week for this particular indicator, and that's going to turn things a little more negative. Growth to value ratio, we did turn down a little bit more after trying to stage some kind of a breakout. We're still in a longer term uptrend, but we just are not seeing a lot of follow through. The Dow, after breaking out, is now coming back down and dropping below where it had broken out. The transports for right now are holding up right above their breakout point, and we're seeing a little more weakness with the utilities. The Dow had been hanging out above this S1 level. Well, we closed down below that. The diamonds have switched from neutral over to negative. The NASDAQ 100, it was trying to roll back up with the PPO, but with the downward move that we saw is now continuing its decline. We're also running into some overhead resistance. We came right up to this previous high with the NASDAQ 100 and then have been coming down since then. The Qs have switched from positive over to negative after Thursday. We're also just keeping an eye on the 61.8% retracement level. We're still a ways away from it, but we just want to keep an eye on this. The NASDAQ came up to its 50-day moving average and then has been dropping back down. We're also in between the 61.8% retracement level and the 50% retracement level. It looked like we might have found support at 50%, but we have not been able to break above the 61.8% retracement level. The FANG index also dealing with the 50-period moving average and now falling back down. The small caps, after recapturing the 200-day moving average, have now closed below that. The Russell still hanging in there a little more positive. We're still above the 200-day moving average. We're turning back down a little bit with the RSI after it had been showing some improvement, but the MACD continues to decline. The mid caps are kind of in between their 50 and 200-day moving averages. Yields ended up being up after they really declined on Wednesday, which gave support to stocks. Well, them going back up gave headwinds to stocks. We're still maintaining a more riskier profile when we look at the riskier bonds versus the conservative bonds. This ratio continues to go up. Longer term, with our PPO study, the long term is coming down slightly. We're seeing more weakness in the intermediate term. We're trying to improve in the short term, but we're still below zero. We're still below this resistance level for the S&P 500 weekly chart. We're also below this resistance level for the NASDAQ 100. Based on Tom Bowley's research, which just doesn't seem to be playing out that way this year. We are coming into the time of year, though, or the time of the month, when we do tend to see some weakness. Maybe that's what's finally going to happen. So what's our outlook for Friday? We're still dealing with earnings reports, and then NVIDIA came out with their report. It was a great report, but the market just decided to sell the news. The markets are really anticipating Chair Powell's speech on Friday. The technicals are negative and now going back to weakening where they had been improving. We will get consumer sentiment, the final reading, and then the big speech will be starting at about 10:05 a.m. Eastern time. We're keeping an eye on the geopolitical events, but in Friday's session anyway, it's pretty much going to focus on the speech. Here's the updated economic calendar showing what's coming out on Friday. Looking at the Stock Traders Almanac statistics, we're coming to the end of the week after options expiration. For August 25th, we're neutral to negative with the Dow, where we're neutral to positive with the S&P 500 and the NASDAQ. We never did really see this nice little bounce that we're supposed to get from the pre-election cycle. Maybe it's still going to happen going forward from here, but it just hasn't happened yet. Also seeing a lack of a bounce here for the NASDAQ as we've been working our way through August. Looking at the S&P, the green line, we should be seeing some kind of a bounce here. At least that's what we've seen historically, but it's not playing out that way, at least yet. We will be on the 19th trading day of the month, and then on the next chart, we're beyond this positive time during a pre-election year, where we're kind of flat to slightly down with the dashed green line, as well as the Dow. We're a little bit more positive when we look at the other indexes. So our scenarios, we're going with the down one now because the technicals are negative and now they're back to showing more weakness. We're not going with the up one, even though we had been improving. We weren't seeing enough of a confirmation in our charts to take that scenario. You could potentially go in the short term with the sideways trend because the ADX is still below 20 and it's below its moving average. The intermediate term ADX is still above 20. So our warning signs. We thought we were beyond this, the convergence of these short-term bearish signals. We were wondering, has it finally finished? Apparently, it has not. The longer-term trend signals may be signaling a top for the S&P and the NASDAQ 100. August is a weak month, but we were supposed to be in some kind of a nice little bouncy time that just isn't playing out, at least yet. The S&P 500 oscillators are negative, as well as the NASDAQ 100 oscillator that we've been watching. The VIX is now resuming its climb after it had been declining. The equity put call ratio is spiking and it's still declining for right now, but that's a 5-period moving average. So it takes a little bit more time for that to turn. All of the indexes that we follow are still below their 50-day moving averages. The cumulative new highs, new lows for the NASDAQ are still showing weakness. The 3-month yield is still above where it was back in 2007. And then we're still dealing with earnings season. The positive signs, we have seasonality and setups that are still kind of far in the background for right now. The daily special K chart is positive where the weekly chart is negative. The longer term equity put call ratio is still positive, but it's starting to turn back up. The S&P is still above the downtrend channel upper line. We're still in a longer term risk on posture, but we've been seeing some shorter term weakness with that ratio. The S&P is outperforming utilities and the staples to S&P 500 ratio is declining. Both of these should give some support to the S&P, but we're just not seeing that. The Russell, the small caps, and the mid caps have generated recent golden crosses. Small and mid cap growth, even though it's kind of been chopping around, they are still positive. The financial sector, even though it's been seeing some weakness, did generate a recent golden cross. The parabolic SAR daily chart continues to be positive. So our conclusion, we are negative and weakening overall. In the short term, we're negative and weakening as well as the intermediate term, but we're still positive in the long term. So have a good day. Enjoy the speech. I hope you found this helpful, and I will talk to you in the next video.